The imposition of tariffs carries a significant risk of triggering a surge in inflation, according to economists at the Federal Reserve Bank of Atlanta. This concern stems from the tariffs enacted during the Trump administration, which have led businesses to anticipate higher prices in the coming year. The economists warn that this situation presents an elevated risk of widespread inflation, reminiscent of the inflationary pressures experienced earlier in this decade due to pandemic-related supply chain disruptions. Specifically, companies that are directly affected by tariffs have adjusted their price growth expectations upward by 0.7 percentage points. Meanwhile, businesses that are indirectly impacted, those that do not pay tariffs but still face increased costs, are planning to raise their prices by an additional 0.3 percentage points. This information was detailed in a recent report from the Atlanta Fed, which highlights the potential for these seemingly isolated tariff-related price hikes to evolve into a broader inflationary trend. The economists from the Atlanta Fed expressed their concern, stating the possibility of seemingly one-time tariff-related price increases becoming a full-fledged inflationary impulse, like the episode we lived through just a few years ago, is elevated. This warning about rising price pressures comes on the heels of remarks from Federal Reserve Chair Jerome Powell, who indicated that the central bank might consider lowering borrowing costs during its upcoming meeting on September 16 to 17, despite inflation remaining above the Fed's long-term target of 2%. Powell noted, downside risks to employment are rising, suggesting that if these risks materialize, they could lead to rapid increases in layoffs and unemployment. In his speech, Powell mentioned that the current monetary policy is in a restrictive phase, and the evolving economic landscape may necessitate a shift in policy. He emphasized the importance of monitoring inflation closely, stating, near-term risks to inflation are tilted to the upside. To assess the inflation outlook, the Atlanta Fed economists analyzed data from their survey of business uncertainty, which collects insights from C-suite executives and business owners across various sectors. This national survey includes over 900 responses and provides a comprehensive view of business sentiment. The findings revealed that business leaders have significantly raised their expectations for price growth since the end of the previous year. In particular, firms that depend on imported goods have notably adjusted their price growth forecasts upward. Economists pointed out, although the imposition of tariffs appears to be the catalyst for the pickup in price growth expectations, the spillover onto insulated firms raises the risk of a broad-based increase in inflation. Insulated firms are defined as those that source their goods domestically and do not incur tariff costs. Powell acknowledged the potential for tariffs to cause a temporary spike in prices, but cautioned that the effects could linger as the costs work their way through supply chains and distribution networks. He stated, it is also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. Other Federal Reserve officials have also recently highlighted the risks associated with inflation. Richmond Fed President Tom Barkin, in a Bloomberg podcast, noted the need for vigilance regarding inflation, stating, while the job market warrants monitoring, you also have to be nervous about the inflation side. He described inflation as sticky and warned that it could accelerate to 3%, pointing out that businesses are passing on costs, and even those without direct tariff costs are using this situation as an opportunity to raise prices. The Fed's preferred measure of inflation, which excludes the more volatile food and energy prices, likely increased by 2.9% last month, up from 2.8% in June, moving further away from the central bank's 2% long-term target. Consumers are also feeling the pinch, as their average expectations for inflation over the next 12 months rose to 6.2% this month, up from 5.7% in July, according to a report from the Conference Board. In the survey, responses indicated a growing concern about tariffs and their association with rising prices. Stephanie Guichard, a senior economist at the Conference Board, noted that mentions of high prices and inflation, particularly regarding food and groceries, have increased again in August. This trend underscores the ongoing anxiety surrounding inflation and its potential impact on consumers and businesses alike.